Hello and welcome to Forex Trading. In today's session, I'll provide a brief introduction to the footprint chart, an essential tool for market analysis. This guide is especially designed for beginners who may be unfamiliar with what a footprint chart is and how to effectively use it in their trading strategy. As you can see, I've prepared a sample chart aligned with the direction of the arrow. At first glance, you might notice the formation of pin bar candles, which typically suggest a potential trend reversal. However, it's difficult to determine whether this reversal is truly reliable. To gain deeper insight, we'll examine the footprint chart and analyze the activity within this price zone more precisely. Looking at the chart, you'll notice that in the direction of arrow 1, there are 107 buy contracts, arrow 2 shows 127 buy contracts, and arrow 3 displays 67 buy contracts. Compared to other areas on the chart, these figures are significantly higher, indicating strong buying pressure in this zone. Based on this analysis, we can confidently conclude that buyers are dominating here. This presents a potential entry opportunity, with a suggested stop-loss placed just below the farthest candle. In this example, you'll notice that the volume within this candle is unusually high, reaching 1,570 contracts, with a delta of 286. The minimum delta is -17, while the maximum delta is 327. To better understand what delta represents, let's break it down. Volume in a footprint chart reflects the total number of contracts traded at each price level within a candle. Delta is the difference between buy volume and sell volume, either at a specific price or across the entire candle. The formula is simple. Delta equals buy volume minus sell volume. Max delta refers to the highest delta value within the candle, indicating the price level where buying pressure was most dominant. Min delta, on the other hand, is the lowest delta value, showing the price level where selling pressure outweighed buying activity. Let me share another example of min and max delta to help clarify the concept. In this case, the market initially shows strong selling pressure, with the min delta gradually increasing. As the selling momentum fades, the max delta begins to rise, signaling a shift in control as buyers start to dominate. This is just a simplified illustration. To apply it effectively in real trading decisions, we need to consider additional factors, such as whether the price is approaching a key support or resistance zone. In the footprint order matching chart, trades are matched diagonally across bid and ask levels. For example, you might see values like 7 matched with 3, 8 with 9, or 10 with 12, indicating how buy and sell orders interact at each price level. Red and green dots highlight areas where the difference between buyers and sellers is twofold or greater. These colored stacks represent zones of market imbalance, where price is likely to react. The thicker the stack, the stronger the signal and the higher the reliability. Thank you for watching. If you found this content helpful, don't forget to like and subscribe to the channel for more insights.